Hey traders, welcome back to another video. Today we're going to be doing a technical analysis breakdown on several markets that you guys requested. So we're going to take a look at things like the US dollar, gold, and if you stick around to the end, I'll even show you my current positions on some of the markets that I am currently trading. Let's go ahead and jump in. So currently we're taking a look at the price of gold, and I'm sorry, not gold, the price of the dollar. And I want to talk a little bit about what we saw kind of going on here in recent times. And as many of you guys may know, I shifted my bearish view on the dollar to actually be bullish. Now, again, I'm going to hold myself back from talking about the fundamental side, but let's keep it very simple on the technical side. What was a very solid downtrend as marked by this kind of dotted downward trend line, we actually saw this level start to break out with some conviction. And after that breakout, I decided, okay, you know what? Again, try and refrain from the economic data numbers that were stronger than expected and continue to do so. The price alone tells me that, okay, price is starting to get really strong here, and pullbacks could be met with perhaps continuations of this trend that we seem to be starting on. So I'm watching the dollar really close as we go into this week. And from the daily chart level, again, I think we've had a shift in momentum when talking about price action. Now, when we drop it down to the 4-hour chart, you can actually see that we are sitting at a level of support. Now, why is this level support? Well, if you'll notice, we exploded higher here after breaking through this clear level of resistance around 102.7. But then once we sort of stalled out and pulled back, what you can recognize is that this level where you get this really pretty pin bar candlestick pattern, we shot back up from this area. Now, you might notice, and if you are, a very astute technical trader, then what you might notice here is that price failed to take out the previous highs. And the reason I point that out is that if you look at this and you say, well, Nick, we didn't take out the previous highs, so isn't that bearish? My thought process on this is that a market in momentum to the upside is not necessarily, guilty of reversal until it actually starts breaking through key levels of support. Now, with that fully in mind, if we do break out to the downside on the dollar index in this coming week, it is possible that this thing could trend back down to like 102.7, which at that level is a very key level for the bulls, as this level again was the consolidation that we had for several days before finally breaking out again on more economic data to the upside. And again, refraining from the fundamentals, but it was of course the idea of interest rates maybe not being cut so fast, and that has the dollar very bullish, and the price action is starting to reflect it. So we're consolidating in this area, and what I'd be looking for here going into this week is that, if you're a dollar bear, you're probably looking for a breakout there and continuation back down to that 102.7. However, as a bull, I think we may actually try to hold this area, and there could be an expansion of price back up to the previous high, but more noticeably, can we actually break out of this level? And I'll show you why that is so key when we go back to the daily chart. If we break out of that level, there could be a clean shot up into the next key area of resistance, where we saw sellers very strong at 104. So I do think that the dollar index has room to squeeze higher to 104, whether it be a pullback back into this 102.6 level or just a quick retest of this 103.25 before shooting back up. We'll watch that as we open into the week, but I am bullish. I think momentum has shifted here. I'm not necessarily, a longer term bull, but the price action here right now still looks pretty dang solid. Next up, we'll talk about the price of gold. And this one, I actually don't have my chart markings up on this one. I don't know, I think I deleted them. So we'll have to start fresh on this chart, but I do want to talk you guys through this concept, and maybe that will be helpful. The first thing I want to point out is that I don't necessarily think gold here is at any sort of extreme. We're not necessarily overbought, and we're not necessarily oversold, as marked by the A1 extension zones indicator, which, by the way, is available now on our website. You can find it at a1trading.com, or I'll leave a link down below in the description. But what we can see here is that from purely our indicators here that just show extension areas, we're not quite at an extreme either way. And you can actually see the green film here, or the red film that shows momentum. We seem to be really lacking any decisive momentum at this time. So worth mentioning that. And if we take a look at just the price action alone, you can kind of get the same idea. We've been pretty choppy, but if you take a look at the daily chart, what was this kind of upward trajectory that we were on, right? Just this, okay, each time price pulled back, there was a solid rally to follow. we tried to do that here and it failed out. So to me right now, what we see on gold is a mixed picture, if not bearish, somewhat neutral. I tried to get short this past week at this retest of this zone. We can actually see it a little bit better on the 4-hour chart. I tried to get short in this area and ended up stopping out. So it wasn't a great trade for me, but I think my theory was okay. We've been seeing some bearish price action here on the 4-hour chart. You know, now maybe the question is, will we head back to retest kind of this trend line here? It could be an interesting area, but I would say price action on the 4-hour chart looks pretty bearish overall. However, to the credit of the bulls, I would have expected us to hold this a little bit tighter if, in fact, we were super bearish. So I think there's a bit of a mixed sentiment here on good price action of gold. But right now, you know, this is not the cleanest chart in you know, the most clean chart I've ever seen by any means. It seems like we're pretty choppy as we speak. What I'd be looking for, whether you're a bull or a bear, from a price action standpoint, would be a breakout of the highs or a breakout of the lows, right? So again, we've seen this area kind of become a level of support recently. So we'll watch to see if we're actually able to break through those lows and start to get some momentum. But for me, I'm going to kind of sideline. Even though I tried to get short, I thought we would have a continuation. I thought we would drop a lot harder. We did not. So what I'm waiting for as a possible bear with my dollar bullish thesis would be, can we actually break this low, retest, and perhaps I'll try my short idea once more. For the bulls, again, the idea is kind of the same. It's, can we break through the highs? And I think you have a big ask there. We'd have to see real dollar bearishness. We'd have to see interest rate cuts becoming more likely in March, which on Friday and Thursday we saw, you know, the odds of that not being as promising. So that was what kind of brought down the price of gold recently. So we'll watch that really closely. And again, trying not to talk too much on the fundamentals, but just shines through sometimes. They're so fundamentally important to what happens next to gold and all the other markets. The S&P 500 exploded through its all-time high on Friday, which was admittedly, and I'm going to be a little vulnerable here, it was actually kind of painful for me. I've been really bullish on indices, but I missed this last leg. However, speaking, you know, rationally, logically on this, I have caught most of this move. I've caught the vast majority of this move, and I imagine that most traders have not caught the majority of this move. The reason I'm pointing that out is I'm not just trying to brag, I'm trying to cope a little bit, if I'm being completely honest, with the idea of missing this breakout. But again, the point is, when it comes to trading, you're not going to catch every move. I don't catch every move, and I'm not a perfect trader. And the reality is, anybody you can think of on social media who acts like they win all the time is probably lying to you. And not only, you know, it was a weird thing. On Friday, guys, I was up in my trading account because I do have some options trades that are pretty much bullish on markets. Specifically for those of you who do care, I have XLK and XLE. I've sold puts on those two, which are essentially the technology ETF and energy ETF, respectively. So I am bullish on markets and I am positioned for it, but I didn't have a full-size position on the S&P 500 like I had during much of this recent move. So, however, let's talk forward. Let's talk constructively. The idea now for me is when we drop it down to the 4-hour chart, I acknowledge this breakout. I acknowledge that I missed that breakout. And now I am waiting patiently if the market gives this to me. Now, I've been on both sides of this many times. I've been in the move and telling people to consider this, but now I'm actually practicing what I preach. I am very much aware that I missed this move. It is a bit painful even after 8 years of doing this. However, what can you actually do about it? You can be patient and practice discipline. Discipline for me is recognizing that this move could continue without me, and that is okay. But if it does grant me the opportunity to try and catch the pullback, I will very likely do so. We saw strong economic data out of the US. We saw consumer sentiment. Oh, let me stop myself. Trying to keep this technical. It's very hard, guys. I'm telling you, this is when you talk fundamentals every single day and recognize how important it is in the markets, it's hard not to cover them. But from a price action standpoint, we got a key breakout of a major level of resistance at that 4,800 mark. I'm looking for that pullback for a possible continuation play. Also, I should take a moment to let you know that if you're wondering how I trade things like the S&P 500, gold, and everything else that I talk about and trade on my channel. I have an oil trade we'll get to in just a moment. If you're wondering how I trade those things, you can see it in the bottom left. There is a WeBull account here, and you can see whenever I take trades, I use WeBull. And if you're in the US and you'd like to use WeBull, check this out. If you use the link down below in the description, you get up to 12 free shares of stock when you use that link. And just a transparency, you'll be helping out my channel because I refer, anytime I refer somebody, I get a couple of shares back to me as well. So if you want to share a couple of shares with me and I'll share a couple of shares with you, make sure to use that link when you sign up, and you can use the same brokerage as I do. I love WeBull. I've used them for years. Their platform is amazing, and they're now available on TradingView. Finally, for my non-US friends, you can also use the links down below in the description. I've got a couple brokerages with sign-up perks and TradingView access when you use the links down below in the description. So check them out. They should be very helpful if you're looking for a regulated, safe brokerage to trade on. No offshore nonsense. Get out of that stuff. I'm telling you guys, you can lose all your money if one of those shops kind of walk away. So get out of there. Trade on regulated stuff. That's my opinion. Anyways, let's keep moving. There's a couple other markets. I want to talk about the NASDAQ, which talk about FOMO. Look at that huge move. We saw a major breakout of what was key resistance. And, you watch this happen. And again, FOMO is a real thing. Doesn't matter how long you trade. It's still painful when you're missing moves like this. But, same thing as the S&P 500. I think we have to wait for a possible pullback and be patient on this one. I am bullish on the indices across the board. I have been, but missing this latest move has been admittedly kind of painful for me. And I pointed that out in our VIP group. I mentioned, hey, it was a little bit painful, admittedly, to miss some of these moves. Also, while I speak about the VIP group, if you haven't already joined us, you can use the promo code and link in the description to sign up for our VIP signals. You get access to all the trades being shared by myself, Frank, and Ivan. And again, let me show you this really quick. If you use code YTVIP, it is all linked down below in the description. You get access to our group for a discounted subscriber rate. So head over to that website. Join our group if you haven't already. It is well worth the money. You have my word. I genuinely believe in what we offer as a service for traders who are trying to improve. It is the place to be. No nonsense, live trading accounts, no fake stuff. So if you want to join us, again, use the link down below in the description and that promo code, which gets you that subscriber discount as we go into the new week. Quick look at the currencies. We can see the euro dollar looks really interesting to me. We kind of retested into this level of resistance here, past support, could become resistance here. We're in a downward structure recently, and the euro, to me, looks like it could yield to any strength on the dollar really soon. So I'll be watching this one going out of the gates this week to see how price action reacts to this zone, as again, I think we're at a key level of resistance. We saw this react previously. We've been choppy, range bound, but I think that could have the potential to continue lower as we reach this extreme right here. So watching the euro really close. Take a look at the pound dollar. We can see pound has been a mixed bag here recently. We've had some weak data out of the UK as well as some strength out of the US. But despite that, the ranging market still kind of resides. In terms of what we see here from a price action standpoint, if we can get a breakout above or below, it could set us a direction, but the pound is not particularly my favorite currency pair right now. Quick look at the dollar yen price is continuing to push higher. Dollar strength is really showcasing here, but it is also notably yen weakness. We saw a big break of this downward structure, and we're still pushing there. If you're a bull on this one, my opinion is, I can't justify being long up at the top here. It could be the top. It could also not be the top. But for me, and trying to remain disciplined, I'd have to wait for some form of a pullback to get involved if I'm, looking to get long dollar yen, which I think it does fall under my category on the Edge Finder. Again, not going to show the Edge Finder, even though fundamentals are key to market success. You guys could hear this is a hard video for me to make. It's hard for me not to use the Edge Finder. It is literally what I use to analyze the markets, but I'm trying to keep a price action specific video set up here. So with that said, guys, that's going to wrap it up. Those are some technical setups that I'm looking at here going into the week ahead. And remember, if you want to sign up for our VIP group, or if you're looking for a new brokerage, or if you'd like to join our free Telegram, we got a bunch of free value down below in the description. Thank you guys for watching. Have a great week ahead.